And joining us now to discuss Bitcoin and more is none other than Shark Tank's Mr. Wonderful, Kevin O'Leary, chairman and co-owner of O-Shares ETFs, as well as now CEO of WonderFi. Welcome, Kevin.
Well, I'm not the CEO, but I'm an investor.
An investor in WonderFi.
Yeah.
A play on DeFi and all things wonderful. Tell me a bit about this new.
Well, the name, I have to admit, right out of the gate, to be transparent, I'm ripping off Richard Branson because he uses Virgin, and I've obviously got this very large social media follower now, Mr. Wonderful, so I'm starting to name some of the companies I invest in with a wonder nomenclature. So we changed the name of DeFi Ventures into WonderFi, and I think it helps us with customer acquisition costs.
Putting your mark on it. Tell me a bit about what WonderFi does.
So what I like about WonderFi is, you know, the challenge with decentralized finance is you really have to go through a lot of hoops to make it work. You have to be very savvy with crypto wallets. You've got to understand exactly what you're doing in terms of how you get your asset into your wallet, and then how you lend it and how you set up the contract, and above all, how are you compliant in the jurisdiction that you're loaning or making interest or capital gains in. And so what we wanted to do for people that are younger, and Josh Richards, who's a phenom on TikTok, who has a huge Gen Z following, people 18 to 34 years old also. He's got 40 million followers. He's a partner with me in that deal. So together we have almost 50 million social media followers. So we're trying to get our customer acquisition costs down. And so we're going to launch the app in a few weeks, but it allows you to use your phone as a simple tool to do decentralized finance, but above all, be compliant. Because when you make interest or capital gains or losses, you have to report that to the tax authorities in whatever jurisdiction you're in. And most people don't realize, particularly in doing that, that they're not tracking that information. WonderFi does that for them. It simplifies it, it makes it really easy to do, and above all, keeps you compliant with the tax authorities.
Okay, interesting, because I remember some viewers may be a little astonished that you are into crypto now, because just a couple of years back you were a bit of a Bitcoin and crypto skeptic, but now there's been a 180 shift here. And the reason why we asked you in the last CoinDesk TV show was that you were concerned that in terms of regulations, crypto wasn't there. And so now I suppose you've kind of warmed up to the idea that it's being addressed a bit more. And particularly right now, the SEC is looking at crypto, Gary Gensler. They're investigating Uniswap and DeFi. They are also threatening to sue Coinbase and as well as other lending product offerings like BlockFi. So do you feel that it's there? I mean, they are exploring Uniswap and seeing whether or not DeFi should be regulated further. Is there any risk there?
I welcome the regulator starting to focus on this asset class. And in my view, here's the way I look at it. We have 11 sectors in the S&P 500. DeFi and crypto isn't right yet an institutional product. I mean, we're very excited about this industry because it's very nascent. But until the regulator sets the rules, and the best analogy I can give is, take football. I love football on Sundays. I'm a big Tom Brady fan. I like to watch Tom Brady play. He can't play football if there were no rules. We can't build this industry without rules. We need the regulator on board to set the rules. Whatever the rules are, they're going to apply to everybody that's a player. And so the opportunity is, even though, there's this tension, particularly, pushed by a lot of the popular press that somehow the crypto community wants to go to war with regulators all around the world. No, we don't. We want to solve for the regulatory environment and get it cleared and get the rules made so that we can grow this industry. And the reason you care about that, just in Bitcoin alone, all right? Over the last 2 years, okay, maybe 2 years and a quarter, Switzerland, France, Germany, England, Australia, Canada, where you've seen the regulator allow ETFs with Bitcoin as the asset class, the underlying, and they're very successful. They're trading liquidly, totally transparently and successfully. I feel that the tone of the regulator, even though it may sound confrontational currently with these discussions you've had just around these situations you just described, that's not the ultimate objective. Most of the people here at this conference want to embrace the regulator, and I'm included in that group, and solve the problem of setting up the rules. And so that once we can do that, there's trillions of dollars from institutions that are not playing in crypto or decentralized finance right now because they don't know the rules and they don't want to be non-compliant and they can't afford to. I cannot afford to be non-compliant because I have so many investments in other compliant financial services industries. So I want this issue to get resolved. And I'm here to be an advocate for embracing the regulator, getting into the dialogue, getting it solved over the next couple of years maybe. It doesn't happen overnight. But when you do that, you are going to bring trillions of dollars into this asset class.
You're confident it will be figured out?
I am very confident that the regulator will figure it out because they want America to be the leader. If DeFi is going to make financial services and transactions more efficient and less costly, we should lead. We should lead. We should set the rules for the world. And I think the regulator knows that, and I'm speculating when I say that, but I'm far more positive on what the regulator can do and bringing value. So I am making investments all over the place, assuming the regulatory environment is going to get changed.
Interesting. And so you're seeing opportunities in DeFi, you're seeing opportunities in NFTs. Tell me a bit about that and how institutions can get involved in that space.
So I'm more excited about NFTs than anything else.
You understand NFTs.
I do understand NFTs. I'm very involved.
I don't completely.
Well, I'm going to give you a use case that is very, I think you'll understand. And I think many people will, and that's where I'm focusing right now. My interest in NFTs is around authentication of physical assets. And I'm going to give you an example. I'm a huge watch collector, okay? Huge watch collector. So this is an FP Journe, a very, very famous FP Journe. I love this piece, but when you buy a piece like this as an asset, all right? That's one way to look at it. I buy it as a piece of art because this dial, you've never seen a dial like this on a watch before. You never will again. It's a beautiful piece. I would like this to have an NFT associated with the serial number of this watch, with the original maker, FP Journe, to be an accreditation for this asset when I pass and it becomes an asset in my estate. I never want there to be a situation where somebody questions the authenticity of this piece. And in the watch industry, a multi-billion-dollar industry, we have Patek Philippe, we have Omega, we have Audemars Piguet, we've got Ming, all of these micro brands. And the biggest concern I've got when somebody offers me a Patek from something that stopped production 20 years ago is it real? Or is it a knockoff of that Patek? How do I authenticate it? Right now I have to go through a series of experts that luckily I know, and collectors that collect like I do know them, but it's very slow, time-consuming, and sometimes requires the watch to be disassembled to prove that it is the original piece from the Patek manufacturer.
So do you envision a chip or something like that of an NFT embedded in a watch?
I don't need the chip. What I need is the NFT to be created around the specific piece with the dial, with the actual back, because most of these watches, the serial number is embedded somewhere. You see that?
Oh,
so
wow, look at that.
All of this information, you can actually see the movement. The NFT could actually have the movement itself so that we would know with certainty that it's this watch. And once you've done that with all of the accreditation and it's been approved by the maker, that NFT is associated with this asset in perpetuity, on the contract, on the chain that's put on. Now, unfortunately, right now, as I'm investing in this business, just in the watch vertical.
Yeah. Oh, so you are investing in this
I'm planning
technology.
on, if not being the leader, one of them, because luckily, I'm fortunate to know all the big collectors in the world. I know all the manufacturers, many of the CEOs, the Horological Society in New York and in Geneva. I mean, if you're a collector, this is a disease, by the way. When I bring home,
I can tell you're very passionate about watches.
But I also know all the large collections in the world. And so when I talk to them and say, look, do you want to authenticate your pieces now? Right. They all want to do it. So we're going to build that platform. I'm going to call it, the Wonder Trust. Can't help myself. But we're investing in that now, to setting and working with all of these different authorities on these different watches. So now you can understand, for an NFT to authenticate a watch and keep it on a chain with a contract forever is a very good thing with this asset class. It could also happen in real estate. It could happen with art that's physical art, like a painting. But there's so many applications to use the chain, whichever blockchain it's going to be. I'm not a big fan of Ethereum for this because it's too slow.
You know, as an investor on Shark Tank, you're dealing with a lot of consumer-facing products. Are you now advising these startups that maybe they should consider crypto in their business plans?
It's a very intuitive question. It's a good one. Absolutely. I mean, I am right now in my operating company at a 3% weighting in crypto. Not just, I don't want to just own, you know, Bitcoin and Ethereum. I want a much broader portfolio. And here's the analogy for you. Let's say you're running $100 billion mandate long-only securities globally. So you would have some rules. You would have, for example, most of these mandates have rules like this. You can't put more than 20% in any one sector, like technology, and you can't own more than 5% in any one name. In crypto, if we're getting to the place where you're going to call it the 12th sector in the S&P, those rules are going to apply as well. So we need more than just Bitcoin and Ethereum. I need 20 different assets, tokens, coins, chains that I want to invest in if I'm willing to hold up to a 20% weighting in crypto. Right now, my weighting target for the end of this year is 7%, but it doesn't mean I won't increase as long as it keeps performing, and so far it has. Yes, there's volatility, I get it, but I think you're going to see a lot of institutional interest once the regulator cleans this up.
Well, how about the small-time business owner? How would you advise them to get into crypto?
You know, the best way to do this if you're a small-time business owner is realize that it's an alternative asset class. For me, what that means is Bitcoin is no different than a building I own. It's a property. I don't consider it a currency. So the coin I own, I'm never selling. To me, I'm just going to let it appreciate in value as the scarcity continues and demand increases. The one problem we have right now, and it's remained since we talked last, I think it was at Bitcoin 2021, is ESG.
There we go.
We haven't solved it yet.
Environmental concerns around
Yes,
Bitcoin.
the environmental concerns, but I have found ways to invest, even with my own ESG compliance. Take, for example, a company like Hut 8. Okay, if you look at their stock trading price, it is very, very, it's very tied to the price of Bitcoin. It has the same volatility because Jamie Levitin, the woman CEO of that company, keeps all her coin on her balance sheet. She mines ethically, she mines ESG compliantly, and any shareholder knows that. So when I invest in her stock, I know that I'm getting a correlation to the price of Bitcoin, but I'm compliant. I don't have an ESG concern.
Is that something you keep in mind when buying an NFT or something like that? Like, is my carbon footprint being accounted for in this purchase?
It's not a personal opinion anymore. If you look at what's going on, it all started with Larry Fink's letter 3 years ago when he started talking about sustainability, climate change, and he's the largest asset manager in the world. And so every pension fund, every sovereign fund that works with BlackRock, the largest asset manager on earth, is also in tune with these sustainability mandates. I agree with what he's doing, and I want to be compliant. So I don't want to all of a sudden find out that I am funding coal-burning electrical stations to get coins awarded through a stack somewhere in the world. I want nothing to do with that. So I'd rather just invest in new, maybe West Texas sustainable facilities where I can use solar and eventually wind and be part of the community there to help the grid in Texas, which it needs some help in. We saw that in the last crisis in the winter.
So are you interested in proof of stake or more environmentally friendly protocols that use less energy?
You know, I realize pragmatically that Bitcoin is the granddaddy asset of crypto, and it always will be. When I talk to institutions, they are not going past Bitcoin right now. The ones that want to play would like to put a 1% to 3% weighting in Bitcoin specifically and hold it just like they do real estate. The problem is they can't yet get past their ESG committees because we haven't given them a path yet to buy it without tripping ESG concerns at their compliant levels. And the ESG committee sits on top of the asset allocation committee. You don't get to asset allocate if you don't get to buy it. Right now you can't buy it. Everybody thinks we solved the problem, we haven't.
What about Bitcoin ETFs? That's still something that has not been approved in the United States. I know you're a big ETFs guy. Do you see that going through eventually in the United States? And this goes to our earlier conversation on regulation. And it's been slow in the United States.
I don't see it getting resolved. I don't see the first ETF coming until we have the regulatory environment to approve it, and also we've solved the ESG issue. So the answer is no time soon. People that are thinking it's coming this year are wildly optimistic it won't. People that think it's coming next year also too optimistic. I'm thinking
go to the Canadian exchanges in order
which
to
you can do. It's compliant in Canada, but I think the real opportunity at another $1 trillion worth of buying would be when we get a US-based ETF for both Ethereum, maybe another chain, in an ETF.
Do you think Bitcoin could be a reserve currency in the world eventually? And we see the developments in El Salvador. Ukraine is starting to consider Bitcoin as legal tender. What are your thoughts on that?
No, I see Bitcoin as a property, a very desired property long term, no different than real estate, as I said earlier, but I see a stable coin like USDC or something else that's pegged to the American dollar, in kind to the American dollar. I mean, you can use DAI. Some people look at Tether. My preference is to work with USDC, which I'm doing now. And so I'll tell you a practical issue I had. I sold down our operating company's real estate position from 31% 18 months ago down to 8%. I don't want to be in commercial real estate right now. I think cap rates are too low for the changing environment, how the economy is changing. That generated a lot of cash. I went to my cash desk. I said, what can you get me on this cash? 21 basis points. Inflation is 2.2%. So I can't...
There are negative interest rates in Europe.
I get it, but I can take some of that cash, which I've done, on a completely compliant basis, and I'm working with Circle on this one, and I'm basically using USDC to write contracts for 30, 60, 90 days and getting between 3.8 and 5.2% paid back in USD on loaning it on a compliant basis. And then if I want to go back to fiat, I can. But the point is that business is a growing one. I think there's something like $29 billion in USDC right now. People are doing the same thing I am. But for my larger portfolio, again, to be compliant with my own compliance department and my external auditors and my regulatory, compliance, so I have to file, I'm using FTX. So, and I have to disclose, I'm a shareholder of FTX now and a paid spokesperson for them.
Yes, right.
So FTX is where I can build maybe a 17 to 20, different crypto position, and again, have compliant reporting. FTX is the only platform I found that is institutional grade compliance.
Right.
So I'm going there.
And I guess in your advising capabilities with the startups that you speak with, maybe they can hold some crypto in their reserves. I don't know.
They have. As a matter of fact, just last week, WonderFi, after starting to trade its public, it made an announcement. It disclosed that it had started to build its asset on its balance sheet with multiple different crypto assets that it deems strategic for where it's going.